Australian Bitcoin podcast, presented by HardBlock, Australia's first Bitcoin-only exchange.
Hello and welcome to the Australian Bitcoin podcast. My name is Daniel. I'm the founder of HardBlock, and with me is Alex, the product manager at HardBlock. And today we'll be talking about the latest Bitcoin news of the past fortnight. Today it's the Thursday, 28th of November. How are you, Alex?
Yeah, good. Very well, Daniel. Thank you. Hello, everyone. Just a great day in Sydney. We just had a lot of stability, warm weather, and now it's starting to storm. So you get some calming rain and thunder in the background, maybe. Just enjoy.
Yeah, so it should be, if you're listening, it should be very relaxing. Maybe you can hear some rain and have like a relaxation session, listening to the rain sound. Anyway, so I'll just quickly do a quick update on the price. So obviously, everything's pretty bullish. Price is going well. We didn't quite get to 100,000 US dollars.
Very close. Yeah, 99
very close.
something.
Yeah, something like 98, 97, around there. Like we almost
got there.
99.
There was definitely 99.
Oh, did you?
99, like 300 or something, yeah.
Yeah, okay.
Yeah.
Cool. I'm looking at like a chart, but it shows the daily. I think that's like the daily price, or not even the daily. Well, the chart I'm looking at shows like around 97. But anyway, we almost got, but not quite. We're still at 95 or something, 96 US. Obviously, I'm talking US dollars. I think most people in Bitcoin, like even in Australia, we're talking US dollars. So yeah, like we're close to there, and just the performance. The 1 month performance were up 37%, year to date 127%. 5-year performance. Guess what the 5-year performance is, Alex?
Well, I know this actually because I was playing around with the new website design and I was looking at the 5-year performance. It's like 1,100 and something percent.
Yeah, over 1,000%. So that's a pretty big number. Yeah. So yeah, obviously that's going pretty well. And in terms of the news, I don't know. Do you have anything? Do you want to start us? Do you want to start us off, Alex, or do you have anything?
Yeah. There's quite a bit of news. Do you want some global news or some Australian news first?
I don't know. Whatever you think, whatever you choose.
Okay. We'll start with some global news. One of the first ones that I thought was quite interesting of the last fortnight is that I'll just go ahead and read the title, which is U.S. Appeals Court overturns sanctions against Tornado Cash. So the Fifth Circuit Court of Appeals determined that the Office of Foreign Assets Control, so OFAC, exceeded its authority by adding Tornado Cash to its specially designated nationals and blocked persons list. So essentially they've said that you can't add Tornado Cash to the sanctions list. And the reason for that is that because it's a code and not a person or a service or a property. And because Tornado Cash doesn't own or control the contracts, because sort of operate all like completely autonomously, like it's immutable code, that's the distinction that has meant that they've been technically disqualified from adding them to the OFAC sanction list, which is, I think it's quite a big win for privacy and development. Obviously, it's just it's a technicality in the sense that they could always, if they really wanted to, they'd just amend the law to be able to change to do this. But it's definitely a bit of positive pushback in terms of privacy tools for, I guess, the wider crypto ecosystem. But obviously, it applies to Bitcoin development and Bitcoin privacy tools too.
So that means, you're saying the Tornado Cash, the company or the tool, is of the sanctions
protocol
list?
Tornado Cash, the protocol. Yeah. So they put it on the OFAC sanctions list, and because the Tornado Cash developers created it, that was sort of one of the things in the case against them. Now, they also did build a website that facilitated people to use it, and I think they'll probably still have a lot of difficulty in their case because of that. Like they built like a website front end to use Tornado Cash, and something like 95% or something of the Tornado Cash transactions went through that front end. So they'll probably still get them on that. But the actual Tornado Cash protocol itself has been ruled that it can't be sanctioned, basically, because it's just code.
Okay.
So yeah,
So, so some
it's
of
a
those
good win for like
developers,
coders speech.
yeah, but it is a good win. But I guess the developers, I think the name of him was Roman Stoigov or something, and somebody else. So I guess they still
He's probably
have to fight
still
the chain.
yeah. He's probably still in
But still
a lot
developed
of
a
difficulty.
website which is deemed under sanctions. Okay. Yeah. Okay. So at least that's positive. So, but still some way to go. Okay.
Yeah.
I'll
Oh,
go to
actually,
the
sorry,
next.
it's not
Yeah.
Roman. Sorry, I got the name wrong. Roman Sterlingov is the Bitcoin, the guy who's being charged with operating Bitcoin Fog, which is the Bitcoin mixer.
Oh.
The Roman, I can't remember the other one. Roman, there's a different Roman that's Tornado Cash.
Okay.
I'm just going to check it.
Yeah,
Roman Storm.
Roman Storm. Okay.
Yeah, Roman Storm. Yeah. Yeah, so that's definitely a big win. It's not often that we see those wins for privacy.
Yeah.
Really, generally, on the legal front, it just seems to be a creeping wave pushing us back, and our only sort of wins are on the technical front. So that's good to see.
Okay. Cool. So like the next news item, I wanted to discuss with you a little bit about MicroStrategy. So there were some some discussions about MicroStrategy and MicroSiler on Twitter. I'm not sure if you saw it, but just to kind of update people. So obviously for those who don't know like much at all, like MicroStrategy and its founder Michael Saylor have been Bitcoin bulls, and they've been buying a lot of Bitcoin the past 2 years and promoting Bitcoin, and he's very well regarded in Bitcoin. So recently, just I think November 18th, they've acquired another 55,000 Bitcoin, which brings their total Bitcoin holdings to around 386,000. I'm just calculating now what's the percentage of all Bitcoins that is. So 386. Sorry.
Be like 1% to 2%, something like that. No?
Yeah. Yeah, so it's almost 1.8%. So they've got 1.8% of Bitcoin. It's actually probably more than that because I'm doing 21 million, but there's less than 21 million because a lot of them are lost.
Yeah.
So it's probably like over 2% of Bitcoin that they have.
Yeah. It's a significant amount, that's for sure.
Yeah, it's a significant amount. So, and the MicroStrategy, the company has, because it's holding so much Bitcoin, essentially Michael Saylor transformed MicroStrategy into like a Bitcoin holding company. It's kind of almost similar. It's not exactly like an ETF, but it's like basically almost like a pure Bitcoin play, right? And I guess the stock price has been going up. So now it's a top 100 US public company by market cap. It's one of the top 100 publicly traded companies in terms of how actively it's traded. So top 100 in market cap and top 100 in traded companies. The share price has surged 500% year to date. And
it's the infinite money glitch. I keep hearing people talk about it, which is that as the share price goes up, they just issue more convertible notes or debt offerings, or even I don't know if they do necessarily at the market offerings as well, like just increase more shares probably. So they just dilute the stock and buy more Bitcoin, which increases the fraction of Bitcoin per stock. I think this is where Michael Saylor's been getting a bit of pushback because he's been calling it the Bitcoin yield, and people who don't really listen to him have basically just heard the term yield, and they've basically gone into like fight or flight just to hearing the word. But when he says Bitcoin yield, what he means is the amount of Bitcoin they have per stock, and when they issue more stock, use the proceeds to buy Bitcoin, he is increasing the amount of Bitcoin per stock. And so it's like this. It seems to be this flywheel. And because they can access such cheap money, like that's such a large company, they can access such cheap debt offerings. It seems to be like an infinite money glitch. Like they just keep being able to add more debt to the company, issue more stock for the company, and then just buy more Bitcoin. It's kind of insane.
Yeah, I mean, you're right. When he uses the word yield, like my kind of like defensive
Yeah,
yield,
yeah.
but like
it's an immune response to that word. Yeah.
Yeah, it's. I mean, Bitcoin doesn't produce yield in itself, and like anybody in the past talking, like the companies talking about Bitcoin yield, often like it has like a bad history,
connotation with scammers.
Yeah. So you're right, but I think he kind of like sometimes uses these terms like, no, he kind of, like when you hear him speak, I guess, very kind of promotional language that's not actually always technically. He mixes technically accurate language with like things which sound good, kind of like analogies which aren't actually correct.
Yeah.
Like, for example, when he talked about like Bitcoin is a store of energy, it's not actually literally a store of energy. Like it's like kind of
it's a metaphor. Yeah.
yeah. But he kind of mixes metaphor, and when he's talking about the yield, is this like a metaphor? Is this talking about a real yield? I'm not sure.
Yeah.
But I think the other like aspect, like where it's kind of a bit for the controversy is so. Like best thing is when he's describing what like MicroStrategy is actually doing, he often uses these kind of mixes these analogies with facts, and sometimes he uses a lot of this, to me, like technical language, which it all sounds very like financial words, and it sounds really good. But I think most people listening it, to be honest, have no idea what he's actually talking about. To be honest, including me, it doesn't quite make sense, and like even like other people, like I feel a lot of people like just nodding and like not fully understanding what he's actually saying. And but so that's one thing, the way he describes it. But like I guess part of the controversy is that is the actual market cap of MicroStrategy is roughly around like twice its actual Bitcoin holdings. I don't know the exact numbers because obviously, like it just bought Bitcoin, and Bitcoin price fluctuates. So this is from about like a few weeks ago, but the number I'm getting, it's roughly like basically the main point is the actual value of a company is much higher than its underlying assets. Like it's about the value of a company is twice the value of actual Bitcoin it's holding. So that's kind of one of the controversies. And the other controversies, again, the way he describes it, it's hard to get what exactly is going on. But after doing some research, I think basically, to simplify it, as I understand it, he's leverage long Bitcoin. He takes loans to buy Bitcoin.
He is leveraged along Bitcoin. That's not the only way. It's not like not all of their financing is leveraged long. Some of it is like convertible notes, which is like you take on like you get funded and then it gets converted to shares once the share price rises to a certain point. And I'm sure there's other funding structures. I'm not like a finance like fundraising guy, but they're definitely levered to a certain extent. But I think the price has to drop by like 95% or something before it threatens them, because they're a public company, and because they're the first really to run this playbook. They've been able to access debt so cheaply that yes, they're levered, but like the amount that they're able to, the ratio they're levered against is still quite low.
Yeah, I mean, from what I heard, and again, I haven't like done a deep dive on the actual numbers when I analyze the numbers, and I'm not an accountant. I'm not like, I only have basic knowledge about these kind of things. So, but from what I understand, the actual leverage is 25% over value over holdings. The debt, like the debt is 25%. So it's like, that's not super extreme, It's like if you have the analogy I heard was if you have $1 million house, if you have like a $250,000 loan, that's not.
I don't think they can be margin called either. Like I think I mean, maybe I shouldn't talk about it because I don't know fully, but I think the way that, because they're such a large public company, I think the way that they're able to structure it is like the debt comes to term at the end of the period. It's not like they're making like constant repayments. They can be margin called at any point throughout. So like, I think, and they're mostly structuring around like 4 years. So if you believe that Bitcoin's mostly going up on a 4-year cycle sort of basis, then it still appears to be somewhat safe.
Yeah.
The other thing I was just going to say is like in terms of like trading it to a premium above your like your Bitcoin holdings, like that's not necessarily like crazy. Like if you think about, obviously at minimum they'd be valued on par with their Bitcoin holdings, and then obviously they still have a some kind of cash flow from their whatever the residual business is before they just went all in as a Bitcoin holding company. So there'd be a bonus or like a valuation premium for that, and then I think there's a valuation premium to being able to access such like debt financing to buy Bitcoin at such a like a low interest rate. And then finally, I think there's also a premium to consider for the fact that they'll be one of the largest holders of Bitcoin, and that obviously puts them in a very promising position if they were to do something. Obviously, they'd have to execute it and have like an actual use case, but obviously we think Bitcoin's going to be useful for things. So rather than just holding, like obviously holding is the primary use case of Bitcoin now, but in the future we expect the uses for Bitcoin to grow in terms of not intermediate, but like being used for all the things that money is used for in the economy. So I think it's reasonable that it trades at a premium above the market value of the Bitcoin. I just don't know what a reasonable premium would be. Like, is 2 times reasonable?
Yeah,
I don't know.
Yeah, I mean, I agree with you. Like, the points you make kind of are valid points. I guess like because there's been some controversy. Some people are kind of like questioning the strategy and trying to find some more info, and some people, a lot of kind of Bitcoiners, like defending Michael Saylor, and like I guess I would just say on that. My personal opinion is, and maybe I'm kind of breaking ranks a little bit with the Bitcoin people, but it's, I mean, I think it's valid. Like the points, I can see the points pro, but like I think it's valid to raise questions because there is some kind of risks and some of the explanations, and it's just like I feel some people, like people in Bitcoin, get too defensive of Michael Saylor. It's just like, well, like, it's like the motto of Bitcoin is trust but verify. And like, like, okay, Michael Saylor has done a lot, but there does seem to be like some with this, like, yeah, sure, some of it makes sense. I'm not saying it's like some kind of scam, but it's like there's some potential risks and you can question the strategy. And I think some people like just getting very defensive. I think there's some potential questions about the strategy and it's like risk, and and yeah, I think like Bitcoin is just that's my point of view. I think like it's okay to question. I think it's good to question, and it's like we should be questioning it, and we don't need to get so defensive about the strategy. I'm trying to learn more, and I'm trying to find find the pro arguments pro his strategy and against his strategy and understand. And I don't think I need to get so defensive at it. That's kind of my point of view about the controversy.
Yeah. Well, there's obviously drawbacks as well, like the fact that they're a huge custodian of Bitcoin now. So, I mean, that's the whole thing that Bitcoin sets out to get rid of, right? Is custodians for money.
And it's multiple layers actually of custodians, right? So
exactly.
And each layer because
because MicroStrategy doesn't even hold their own Bitcoin. Yeah.
Yeah, so I believe it's Coinbase. I think it's holding it for them. I could be wrong, but it's like definitely not them. It's some other company. So it's like you're taking, let's say it's Coinbase. You're taking the risk that what if something at Coinbase blows up, and then what if like that strategy that MicroStrategy is pursuing, like it turns out it's more risky, and that strategy blows up. So there's like you're adding more points of failure, like. And I like personally, like, I hope, I'm not trying to be like a hider. I hope Michael Saylor, it works out and it's how like it's all. I hope it works out well, and I can see like basically like it seems if Bitcoin continues going up like 25 or 30% per year, it probably will go up, right? He's leveraged along Bitcoin, as I understand, so it would go well. But I just think it is. I feel there's some risks there. I personally wouldn't. I'd be reluctant to put my money on in MicroStrategy, in like buying MicroStrategy stocks. It just seems like risky, and okay, obviously this is like a very different thing. But I've heard on individual cases where people have in the past bought Bitcoin and leveraged themselves long, like during a bull market, and it ended up going not well for them. I think even Dio, from from the podcast, he does I forgot his podcast name now, but I think he talked about it when he got into Bitcoin. I think he went leverage long and didn't work out for him. I could be wrong about that, but I think he mentioned something like that. So sometimes, people sometimes do that and it doesn't go long. I guess I'm kind of conservative. I just find like there's valid risks to Michael Saylor's strategy. I'd be personally reluctant to put I guess I'm like, I advocate hold your own Bitcoin, and I think just don't get too fancy. Hold your Bitcoin in a hardware wallet, and yeah, I guess that's just what I wanted to say about that.
Yeah, that's great advice. So,
yeah,
should we move to some Australian news?
Yeah, sure.
Yeah. All right. Well, we've got another win actually on the legal front, which is. This is not Bitcoin. Well, I guess it is somewhat Bitcoin related, since they were looking to censor any criticism of the economy or the banking system. But in Australia, the Labor government has abandoned their push to censor misinformation online. So the MAD bill has been abandoned. So the government's dumped its misinformation bill, which was seeking to regulate speech on social media platforms. And I've got a quote from the ABC. Even the ABC would say that the bill was widely criticised by legal experts, media companies, and the government's political opponents. And I don't know if anyone's seen the video that's just circulated as of yesterday or the day before, where the head of the ABC was basically asked a question about what he thought about Joe Rogan, and he went on a huge rant about how he'd never watched Joe Rogan and wasn't interested in Joe Rogan at all, but he knew he was like the most evil person alive, kind of deal. So even the ABC is saying that the MAD bill was just insane. So it's good to see that that's been withdrawn. And I mean, it was somewhat inevitable, I think, following the Trump election, especially with Elon being such an important figure in that, because the Australian government's been clashing with X and Elon over the last 6 to 12 months around this nonsense about censorship. So anyway, another victory, another legal victory.
Yeah, that's right. Yeah, I saw that clip today in the morning. It was very funny because I think it was the head of IBC News, and he was asked about Joe Rogan. He said first sentence, he says he's never watched any episode, and then he goes on like this big rant for 5 minutes, spreading misinformation and like doing on fear. After just mentioning he never watched it, he then talks about how it's spreading fear and misinformation, and like for 5 minutes he went on a rant about all these things after just admitting he didn't watch it. It's
the hubris to have no idea about a topic and then pontificate about it. It's crazy. And this is meant to be this is the head of our ABC, which is like, they purport to be like a neutral reporting like broadcaster. So complete joke.
I mean nobody's fully neutral. Everybody has their own biases, but it's like
but that's what they claim to be, right?
Yeah, exactly. But it's obviously like they feel threatened because they want to be like this. They want to set the agenda, and they feel themselves like people should be thinking what they're telling them to think, and they feel threatened because people are having other thoughts. They want to set kind of the agenda of they want to be able to create the narrative. They want to write the narrative, and they think people should be believing their narrative, and they're upset that people are getting the narratives from other places.
Exactly. Yeah. And then aligned with that, we've still got. I didn't check the status of this before we had the podcast, but there's also the age verification bill. I can't remember what exactly it's called, but they're looking to ban under 16s from accessing social media. But essentially, it's just a backdoor way to KYC your access to the internet, because they're going to have to put in some kind of age assurance or age verification for any use of social media sites. But that, I believe that's either likely to be passed or maybe even has been passed at this point. I'm not sure. In fact, maybe I'll just look it up.
The age verification bill.
Yeah.
So that's gonna pass?
It's expected to pass, I believe.
That sucks.
Okay, it doesn't look like it's been passed as of yet. But I think it's still up for discussion. And from what I saw yesterday, it's expected to pass because both of the major parties are supportive of it. In fact, like there's only two. I think there's two Liberal senators that have crossed the party room floor to oppose it, which is Alex Antic and I think Matt Canavan. And then other than that, there's just a handful of independents or some minor parties that are opposing it. So I think it is likely to pass. But that's going to be a clusterfuck. But I guess we'll cover that at a later date.
Yeah. Alex Antic, I think he's from Adelaide, I think. He's a senator.
Yeah, he's been quite good on some good things.
Yeah. So, I think he's from Adelaide, South Australia. Yeah. Do you know how, like...
Well, I've got... Oh, sorry.
No, I haven't looked at this, but do you know how they plan to implement that? Like, is
no, that's the whole thing. They have no plan. Yeah. There's no plan to implement it. They were going to plan... This is a lot of the controversy, is that they're planning to launch the bill, and then the bill empowers the e-safety commissioner's office to develop some kind of framework for how it should be done. And so all the platforms, even the platforms that are, relatively pro censorship, even them are like, well, you can't give us just 12 months to implement it after the bill's passed when you haven't even given guidance in the bill for what you want, because that's the way it's sort of structured, I believe, is the bill passes and then they've got 12 months to implement it, except it's only after the bill passes that whoever's the regulator is responsible for developing the guidance. So it's a bit ridiculous. Yeah. And then the other thing that was very crazy about it is they gave 1 day for consultations. So if you had feedback on, if you had feedback, they opened the consultation period where you could submit feedback on the proposed bill for literally 1 day, which is it's unbelievable that's even that's even allowable. You'd think there would be a minimum consultation period, much more than that. But
obviously, they don't want consultation.
Yeah, exactly. They don't care. Yeah.
Because they don't want consultation because they know if there's consultation, most Australians probably don't want this. Actually, like it's they know if there will be consultation, it's going to get a lot of criticism, and like the more this becomes, it's going to become unpopular with Australians. So they're trying to like shut down debate on it.
Yeah,
which is
Well, the question is going to be like what happens around VPNs, and from what I understand, it's probably infeasible for them to ban VPNs because they're used by so many sort of like global businesses as like a key aspect of security. So VPNs aren't probably under any kind of realistic threat. And then also like now that we've got the Trump election and Elon in at X, they're just going to refuse to comply, it seems like. So I guess, even if they do pass this bill, like how effectively is it going to be implemented? It's going to be something that gets passed and then gets watered down and in effect. I think that's probably my expectation. But for now, we'll just have to wait and see. And hopefully people keep fighting it.
Okay. I've got a few more news stories. I'll just kind of do like a rapid fire type of thing. Just summarizing them because so we don't take too long. So one is Rambo announced 20 million Bitcoin treasury strategy. So you Rambo, it's like an alternative to YouTube, and basically we're gonna have hold its assets in Bitcoin. So that's great. Also related, Sample Scientific, which is a different company, also purchased an additional 297 Bitcoin. So it's holding now 1,500 Bitcoin, also holding its assets in Bitcoin. So and this is a lot thanks to Microstrategy.
So they're American.
A lot of companies are now increasingly holding their assets in Bitcoin.
Yeah, that's a trend we're going to see accelerate through this bull market, I expect. I've got another quick fire one, which is Anchorwatch. Anchorwatch is a Miniscript-based wallet launched by Rob Hamilton, who came out here to Sydney the other week for Cheat Code Conference. And they've announced that they've become a Lloyd's of London cover holder. So they'll be launching their company in December, so next month. And they'll have up to $100 million of binding authority per customer, securing the wealth of American retail and institutional investors. So sorry, I probably skipped the important part there, which is Lloyd's of London is one of the oldest insurance firms in the world. In fact, they might have instituted the concept of insurance, really, because they were like hundreds of years ago. They were insuring ships, doing the sort of global navigation to get spices, like East India Trading Company, that kind of thing. So they insured all the ships, and now they're insuring Bitcoin. So if you want to hold Bitcoin, insured Bitcoin, the Anchorwatch wallet is Miniscript enabled, so you have lots of recovery pathways, which means that there's so much redundancy that they're comfortable insuring it as long as you hold according to their specification. So it's definitely quite an interesting development in terms of, I guess, that more mainstream financial adoption of Bitcoin.
And so in Bitcoin insurance, is this for kind of Bitcoin businesses, exchanges, or is this also for individuals?
It's for individuals.
Or for individuals.
I suppose businesses as well. Yeah, it's just for holding and securing Bitcoin.
So, for example, if I've got Bitcoin,
I think there's probably a minimum.
But if I do, I could get Bitcoin insurance.
Owner of a Bitcoin exchange is owning Bitcoin, I'm sure. Yeah.
So I could get insured. Anybody could get it, basically.
Yeah, there's probably a minimum. I imagine there's a minimum amount or spend, but yeah, I'm sure, and over time that will come down, I would think as well.
Mm-hmm. Okay. Yeah. Another news item. So in the Pennsylvania House of Representatives passed a Bitcoin rights bill that protects residents' rights to self-custody and to use Bitcoin as payment. So I'm going to read from a Forbes article, some sections. So basically the bill enshrines the rights of individuals and businesses to self-custody digital assets, operate Bitcoin nodes and conduct transactions without interference from from the government. So it passed with mostly bipartisan vote. There were 26 opposing votes, which all came from Democrats, but nevertheless, there were many Democrats who did support the bill and highlighted its potential, to support economic growth. So that's good to see.
Cool. Did you say that was Pennsylvania?
Pennsylvania, yeah.
Oh, cool. Well, I've got actually another news item from Pennsylvania, which is that they've introduced, they haven't voted it in yet, but they've introduced the Strategic Bitcoin Reserve Act, and so which would allow them to allocate up to 10% of the state's funds to Bitcoin. And then apparently there's 10 other states in the US all have pending Bitcoin Reserve bills, so that's pretty cool.
Yeah. And last news item for me, so Gary Gensler, the head of the SEC, will be stepping down. So he wasn't liked in the Bitcoin space because he was seen as kind of hostile to Bitcoin, and Trump kind of in his pre-election speeches said he'll fire him, and he was and he said that at a Bitcoin conference, and everybody was cheering. So Gary Gensler has decided to step down.
Yeah. Well, it's what it is. I'm personally in favor of Gary Gensler's approach to deeming all of crypto unregulated securities, because that is my view that they're mostly, if not all, just outright scams. But yeah, obviously he was going to move on with the Trump election.
Yeah.
I think there was some. I think his term wasn't due to end until 2026, so there was some talk that he might stay on. But yeah, obviously got the resignation. He just wants to move on.
Yeah, I mean, to be honest, I don't know enough about that stuff. Also, it's kind of in America, and SEC and always regulations. It's not my area of expertise, but I know a lot of people in America in Bitcoin don't seem to like him. So I guess he's probably bad.
Right, well, I've got one final bit of news, which is it's Australian news, and that's the Australian Libertarian Party is, I guess by the time this podcast is out, will have released their Bitcoin policy, or at least I've had a look at their draft policy. They're coming to Bush Bash, but then I'm heading down to Bush Bash in Parkes in New South Wales this weekend. So by the time you're here, we will have probably been to Bush Bash and back. And so, yeah, we've got Greg Revell and Rob Cribb, who are sort of, I guess, senior members in the Libertarian Party, and they've been involved in drafting the policy. So they're going to put on a panel for us on the Saturday afternoon. And so I've had a look at it, and it's pretty impressive. It's very well written. And I just separated out some highlights, actually, if you want to run through some of the highlights of the proposed Bitcoin policy for the Libertarian Party.
I wonder if we should. Okay, should we?
I'll just read them out. It's just
yeah.
So we got number one is they want to remove capital gains tax on Bitcoin transactions. They want to simplify tax reporting for businesses and individuals. They want to remove GST, give tax-free status to Bitcoin payments. They want to set invoice standards so that prices are shown, like when you get invoiced for things, you get shown dual AUD and Bitcoin prices. I guess that's probably only in the case if you're paying in Bitcoin, like you show both an AUD and Bitcoin price. They want annual reporting and evaluation of Bitcoin adoption and use in Australia. They want a public awareness campaign to address misconceptions around Bitcoin. They want formal legal recognition of Bitcoin as a currency. They want legal protections for self-custody, changes to regulations to support integration into the existing financial system, high school level Bitcoin curriculums, as well as public resources, workshops, and online courses about Bitcoin fundamentals. They want to give grants and incentives to institutions that are developing Bitcoin-focused research programs and certifications, industry forums, seminars, and conferences. Most importantly, it's like a Bitcoin policy. It's not like a digital asset or crypto policy. And so they want to define Bitcoin separately from other digital assets based on its decentralization and its specific use as a monetary asset. They want to limit government surveillance and make sure that transaction data is restricted and only available under warrant. They want to promote and assist development of privacy technologies like CoinJoin and other privacy protocols. They want Bitcoin miners to be granted equal access to electricity resources and the grid, and remove not allow any targeted restrictions or surcharges just simply based on the fact that they're Bitcoin miners. And then finally, they want Bitcoin miners to be able to participate in power purchasing agreements and ancillary services, like you see happening widely in the US, so that miners can contribute to grid stability, enhance demand and flexibility, and optimize energy usage. So that's once they release it, highly recommend people that are interested go have a read. It's well written. There's a lot of, it's more than just a list of policies. There's justifications and examples from other countries around the world and the impact. And then also from the Libertarian Party side, like how it aligns with their principles. So yeah, it's a good read, and I think it's very promising.
Okay. Well, send me the link and we can try and put it in the show notes. And I might ask them if you want to come on the podcast for a future episode and we can discuss in more detail.
Yeah. I'm sure that'd be really good, yeah.
Anyway, are you happy if we finish for today?
Yeah, that's good.
Okay, thanks, Alex, and hope everyone enjoyed the show, and see you next time.
Catch you later.
Australian Bitcoin podcast, presented by HardBlock, Australia's first Bitcoin-only exchange.